Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings at 8 o'clock Central to have this Zoom to talk strategies, tips, techniques, success stories, and support you. With travel this week, we did not have training yesterday on May 11th, and actually we will not have Zoom tomorrow on Friday, ironically Friday the 13th, but we'll be back Monday for a full week next week. We've had a number of events and workshops that have taken us out of the office, so apologize for that. Today we're going to have a brief discussion talking about the topic of credibility. So what you and I know, many small business owners don't know, they probably don't know they don't know. If what we're wanting to do is to get funding to start or grow a business, we have to be credible in some element. It's the same thing you and I learned in school, right? The 3 C's: creditworthiness, collateral, capacity. Credit could be personal and or business. Collateral is what we have to pledge for, pledge against the loan in case we were to default, to mitigate the loss of the lender or the extender of credit. Capacity means cash flow. 3 C's. So we work on those 3 C's during the 4-week funding program as we're building out the client's loan package. So I think most of you have been familiar with this, but just a quick recap. So we applied for, received a grant, covers 100% of the cost to the client to go through the free 4-week funding program. It's essentially the same curriculum, not quite the same, but it's almost the same curriculum that we used to teach at a college. I was a full-time professor. It was a 12 to 16 week course, and we helped entrepreneurial students once they applied to college, got accepted to college, took the class. Usually there's a wait list in the class, but they would go through a curriculum that allowed them to build their loan package out so they're ready to go to funding, as well as building financial literacy, learning what they need to know. Well, when we applied for the grant, we knew with adult learners, we needed to consolidate it down. So it's a 4-week, a 28-day process. And so it's free. There's no cost for the client to go through that 4-week curriculum. Each week, there's a different module. The first week is on business planning, which is not our topic today. On the second week, we address business credit and helping them build their business credit out, which is not our topic today either. But we also help them complete a personal financial statement, which is relevant. That is what we're talking about today. So on the right-hand side of the screen, what you see is a PFS form, personal financial statement. This is not the business financial statement, which is commonly called a business balance sheet. That's not what we're talking about. We are talking about the personal financial statement. Now, granted, this one is from the SBA. Each lender may have their own, or source of capital, may have their own format, but it's essentially the same. We like to use this as the form that we fill out when we're going through the 4-week curriculum, because we love SBA loans. As you know, I used to work for the SBA, but the format's essentially the same. So don't be confused when you see this to think, oh, I'm applying for an SBA loan. No, this is not an application. It's part of what an application would include, but it's a standardized format for what? For a personal financial statement. When you and I look at this, we look at this without emotion. So often clients will be emotionally engaged. And so you and I just have to step back. Now, if you're a white label partner, granted, you're going to be the one helping clients complete this, because you do the mentoring. If you're enrolling someone in the free 4-week funding program, we have mentors. All of us either work for the SBA, was a SCORE mentor, and or a college professor. We'll handle this activity for you. We'll do the mentoring. But specifically, what I wanted to accomplish today is help you understand a little bit more about our approach in week 2 of the 4-week funding program, which is free to the client, to help them create a credible personal financial statement. I'll say this, and I don't think it's an exaggeration at all. Nearly every client that we've had will do a poor job of filling this form out if they don't have assistance. So I'm not degrading them or demeaning them at all. I'm just saying it's not a natural form. There's some nuances, which I'll describe to you briefly as we go through. And so this further validates why you're needed, why we're needed, why this program is needed. What we do is called technical advising. And I'm just telling you, you can have clients that have an MBA from an Ivy League school, and they probably never taught them how to optimize a personal financial statement. So I'm going to give you some of those tips. So again, we automatically do this, and it's part of the free program in week 2. They'll receive the week 2 email 7 days after they enroll. On the first day, they receive the week 1, the module 1 email, obviously. So they receive this, and they also receive step-by-step instructions, but they're assigned a mentor, and the mentor will further help them. I've had a call this morning already. I've had 3 mentoring calls already this morning before today's Zoom, and one of the 3, in fact, we were working on this. So some of this may look obvious, but I want to hit some highlights. So up to this point, I've just been providing you an overview of why where this comes into play. I probably haven't told you why it's important, which we should do that first before we go through the details. Why is having a personal financial statement important if we're building out a loan package and wanting to get funding to start or grow a business? Because most lenders will expect this, or will often require this. Why do they care? Because this shows what the credibility, remember that was our word we started with, the credibility of the borrower is. Now, I know we want to get business funding under the business name whenever possible, but there's always some owner of the business, right? That the business is not a living, breathing human. It's an entity. So there's someone behind the scenes running the business. So often we'll fill this out for any owner that has 20% or more ownership. This is not a credit report. This is not looking at credit. It's looking at the net worth of the key person or key persons. So with that being said, if that doesn't make sense, go ahead and put into the Q&A, which is like chat as Zoom, and I'll further elaborate. But now let's go through some of the nuances of filling it out, and I'll highlight some of the areas that I commonly see mistakes. First of all, we have to have a date. This has to be specific to a date because things change on a daily basis. So this is not a date range. This is going to be accurate as of a given date. Obviously, we're looking at the person's name, the business phone number, their home address, home phone, home address, and then what the business name is. But this is still a personal financial statement, but it's used in business financing. That's why it's asking some business questions. Make sense so far? Now, what you and I learned in school, I used to be a high school teacher. And so what I believe that our society learns is when you're filling out forms, you start from the top and work down, and you start on the left and work to the right. And as intuitive as that may be, that is not the way that this form is filled out. It will be filled out wrong if you do what normal people do. And again, I didn't develop the SBA form. I don't have any ability to change it. So what you and I do as technical advisors, again, if you're a white label partner, you're helping clients with this. If you just want to be a referral partner, you go to 4weekfunding.org, fill it out, let us know you want to be a referral partner. We take care of this for you. Okay, so actually these sections here, the assets, which are the things that the individual owns, and liabilities, those things that they owe, OWE, is filled out at the end. So actually what we do is we start with section 1. And again, I know the form's a bit confusing. That's bad for the client, but it's great for you and I because, again, most people will not do a good job on their own, but they need your or my help, whoever is doing the mentoring. So we actually start with section 1 and start filling out and go through. So section 1's talking about sources of income, obviously, and we have to describe it if it's in parentheses here. Section 2 is notes payable, money owed to others. And so this could be for car loans or personal loans or credit cards or what have you. Section 3, now the point we're going through is we're going to go through these sections, and then what happens is you come back and then you tally up and fill out the assets and liabilities. But these are often subtotals that are derived from below. Section 3 is a very important one I want to bring your attention to, because while some people have retirement funds and IRAs and 401ks, if you own your own, separate from that, if you own your own business, then you probably have stock in your company. And so often we see clients overlook the fact that maybe their biggest asset is the business that they own. And so often we'll see people won't even list the ownership of their business. Now, chances are their business is not publicly traded, so it becomes a little bit more interesting in figuring out the total value, but we can help them with that. So in the end, we're calculating what the net worth of the individual is. The individual is considered a key person, someone that owns 20% or more of the business. The bigger the number, the better. If we don't have at least $100,000 of net worth, it's embarrassing. Embarrassing. No one should have less than 100,000. We can help them create this legally, ethically, morally, and ensure they have at least $100,000 of net worth. We do not want to have a personal financial statement less than $100,000 of net worth. So part of that net worth may very well come from stocks and bonds, and it might in fact be stocks of the company that they own. Again, I realize if the company is not publicly traded, it becomes a little bit more subjective, but we can leverage that to our benefit. You know, how much is your company worth? We got Alfred on here. Alfred, how much is your company worth? You got Bruce. Bruce is a machine up in Michigan, bringing in hundreds of clients. So Bruce is worth a lot on paper. Bruce is a wealthy man on paper because his net worth is high, because of the ownership he has in his company, let alone any other assets. Section 4 is real estate. If we own the home we live in, primary residence, normally that is property A. If we own rental properties, that's B, C, and we can add additional pages if necessary. Section 5 is commonly understated. Think of this as if, heaven forbid, your house or your apartment or your trailer burnt down or was blown away in a tornado. What would it take for State Farm or Geico, wherever you have your content insurance, to replace everything you own? Your electronics, your clothes, your jewelry, your weapons, whatever. So often this is a pretty significant amount. We'll commonly see people, well, some people will just come up here and put, oh, I've got 0 personal property. And it's like, oh, so you don't have a pair of shoes on right now, do you? You have no clothes on, no underwear on. You're sitting there stark naked, devoid of all resources. Well, of course not. Well, then you're lying to say you have no personal property. I don't think we'll run into anyone that has no personal property. The guy pushing the cart with bags down the side of the street has some personal property. I don't think hardly anyone has no personal property. And so we don't want to put 0, because that makes us look like a vagrant. That doesn't make us look real credible, does it? Right? And that's the word for the day, credibility. Unpaid taxes, if applicable, other liabilities that we might own. Now, life insurance is an important one. A lot of people will screw this up because it's here you're gathering the details of it, but when we get up to the top, it's asking for the cash surrender value. And some people don't even know what that means. So those of you that are licensed life insurance agents, what an educational moment to sit down with people and help them fill this out. I can't imagine that there's anyone that's a licensed life insurance agent that wouldn't want to be filling this form out for dozens of people per month, because it's essentially a needs analysis from the insurance perspective, because you're understanding where they're at and finding gaps and voids. All right, so we've covered that it's of a specific date, and then the demographic information, and then cash on hand. That's how much we have, under the mattress, in the coffee can, in banks, what have you. And then say what we have in savings accounts, the retirement accounts, but notice it has to be described down in section 5. So the description is here and the summary amount is here. If we have any accounts and notes receivable. A lot of people say, well, not really. I don't have anyone that owes me any money, because again, this is not the business financial statement. This is the personal financial statement. But if we get down here and we see that the net worth is not worth at least $100,000, we're going to probably consider adding some notes receivable, because we don't want people to look uncredible. We want them to look credible on paper. And there are legal, ethical, and moral ways to do that. And this is one of those. Again, life insurance, if you're a life insurance agent, you'll love this, but regardless, we're capturing the cash surrender value, not the death benefit. Stocks and bonds, we talked about a moment ago, really important, because we need to capture the value of the companies we own directly, as well as those we may have investment in, and we can help them. So what you can see is it's pretty easy for us to get most people to be a millionaire on paper, literally worth $1 million or more, when we work these numbers. Work is the verb I'm using, but legally, ethically, morally, get these numbers optimized. Why does it matter? Because if you have someone that's destitute, why in the world do you think that the bank's going to feel confident that the person's credible to go borrow $100,000, $250,000, $500,000? They're destitute, and all of a sudden they're trying to get an injection for their business, more money than they ever had. That doesn't look good. We need to make them look credible on paper first. Real estate, which again is a summary of what we had down here on section 4. Automobiles was a question I had this morning from one of the clients. So this is the value, market value of your current automobile. So let's say, like I bought a Mercedes S560. When I bought it, it was $122,000, but that was 2 years ago. It's got 8,000 miles on it now. It's not worth $122,000 anymore. It's probably worth $95,000. Do I owe it free and clear? No. Owe Mercedes Financial on it. I still am going to list the current value of it, but over on the liability side, which we've not gotten to yet, then we're going to report what the debt is. I think I owe like $23,000 on it yet. Oh, one more zero. But this would be a cumulative of all the vehicles you own, not just one. Other personal property that comes from section 5, and other assets that have to be described in section 5. Then we come up, and so then we total it, right? We just add all those numbers up. Pretty simple. Not so simple on this side. I don't think the form was filled out to be very simple. So on the right-hand side, accounts payable, money that we owe to others, notes payable, which would be described in section 2, the total amount we owe on automobiles, and then what the monthly payments of those would be. And I pay $17.99 per month on the S-Class. Installment accounts, total amount and monthly payments. If you have any loans against life insurance, mortgages on real estate. So over here, we're counting what the total value of the real estate is. Let's say you've got a $500,000 home, comma. You might say, well, I owe $100,000 on it. Well, we put market value over here, just like we did on the S-Class. On the mortgage, we're going to list what we owe yet against it. Unpaid taxes, if any, other liabilities that would have to be described in section 7. And then here's where it gets confusing. It's pretty easy once you explain it. So to me, this line should be bold, because this is the total of everything above it, right? See here, this is the total of the number. I'm just writing the description. Then what's really weird, well, what you should know, the accounting equation is assets equals liabilities plus net worth. So to get your net worth, you take your total assets, subtract your liabilities, and then you get your net worth. And so since the accounting equation is liabilities plus net worth must equal assets, then it's total, we'll just put liabilities, liabilities plus net worth. So this has to equal our total assets. So that is a brief overview of how to fill out the personal financial statement correctly. And then we also talked about some areas that we can help the client improve their net worth on paper, most specifically to make sure that if they don't have enough net worth, that we add some receivables. If they're not capturing the value of their business properly, to make sure that they do that. And then also make sure that they don't omit the value of their personal property. Any questions, comments, concerns on this? All right, so Bruce is just asking for clarification. So that's right. If you're a white label partner, then you'll be helping clients fill this out. And it's great if you're a white label partner, especially if you're an insurance agent, because this is going to really open up dialogue about what type of insurance they have and how you might be able to help them. That's not our deal, that's yours. If you're referring people into the free 4-week funding program, then we'll assign a mentor, and this will be worked on in week 2. So you wouldn't have to worry about it if you're just referring people in. If you're not a referral partner, come to 4weekfunding.org, fill this out, click the top button, follow the prompts. It'll send you a link, and then your page will look just like this. You send people to it, you get credit, because when they fill this out, it's hard coded to you, and then our mentor team will work with them. Who has any questions, comments, concerns on the personal financial statement? Timothy asked if we use this in all circumstances. And so, yes, this is part of the 4-week curriculum. We're helping people learn how to assess their personal net worth, because some people don't know how to do this. And then it is part of the data set as we're putting together the loan package. If they're weak, we can help strengthen, or alternatively, we need to focus on sources of funding that don't care about the credibility, the net worth of the key person of the borrower. Hopefully that makes sense. Joseph is commenting how valuable this is, that he uses something similar to, he's a big time real estate agent up in Arkansas. And so he says he uses something similar to this with his real estate clients for getting them ready for mortgages. Excellent, Joseph, thank you for that. Anyone else have questions? What's the takeaway from today? Well, I hope you realize that the 4-week funding program, in addition to being free, it's a $2,500 value for the client. It is an excellent opportunity to help people. You'll generate, on average, I mean, it's not get rich quick. You don't pay anything to be a referral partner, but normally you'll make right about $5,000 for each person that you refer in to your landing page, and you don't have any other responsibilities. And when we go through this process, we're helping build a lender compliant loan package. And part of that is building out the personal financial statement and helping them optimize it, because a lot of people will understate or not optimize it. We won't lie, we won't cheat, we won't steal, but legally, ethically, morally, we want to get their net worth to preferably be at least $250,000, but at least 100,000. And we can do that for anyone. We can massage the numbers legally, ethically, and morally to get it there. Hannah's asking about the key person policy. So you'll just work with your mentor, Hannah, and during week 3 is normally when collateral is discussed, both in terms of collateral from the balance sheet of the business, as well as collateral from the perspective of key person policies. All right, well, that's our topic today. We will not meet tomorrow because of travel. I'm sorry about that. Heading to Houston tomorrow to do a workshop, but we'll be back Monday and full week next week. Hope all's well with you. Let us know if we can do anything, and we'll see you again Monday morning. Bye-bye.